Good morning, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top highlight events that are expected to be moving the markets today. So we'll also be talking about technical analysis, trying to understand the prevailing market structures. Once we do that, hopefully everyone will trade from an informed perspective. So as always, this session does not constitute any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So let's start with the economic calendar, and there's quite a number of events that we'll be expecting for the day. So from the forexfactory.com website, you can see that we haven't had any major news compared to last week or next week. So far, it has been a pretty smooth week. Also concerning Trump threatening to fire a Fed member. And that has been quite a popular topic in the markets, clearly leading to increased volatility in US dollar pairs. So also, we had a surprise uptick in inflation in Australia yesterday at 4:30 a.m., where we saw inflation ticking up to 2.8% year over year compared to the previous reading of 1.9% and an expectation of 2.3%. So today, we have had quite a number of data points. Trying to refresh my calendar here. So the first data point that we got this morning was from Switzerland. In this case, medium impact news, where GDP came in at 0.1% as expected, quarter over quarter. And this was a big slowdown from the previous reading, where we saw a 0.5% increase, which was later revised lower to 0.4%. So the main event for the day at 2:30 p.m. First, we'll be having the ECB monetary policy meeting accounts. This is minutes of the last European Central Bank meeting. And they basically share details of how the members viewed the European economy or the Eurozone economy, trying to understand what they were considering before they made their last meeting decision. And of course, this is bound to cause some increased volatility in the euro pairs, with a key focus on the euro USD currency pair. So if the ECB members see a need to go ahead and continue with rate cuts before the end of the year, that would likely weaken the euro compared to other pairs. On the other hand, if they are planning to hold on the current interest rate level before they see some form of reaction in the markets, then that will likely continue to strengthen the euro, which has been super strong since the year started, up over 12% since the beginning of the year. So we'll also be getting the current account data from Canada at 3:30 p.m. This is the difference between exports and imports. It's sometimes referred to as trade balance. In this case, we're expecting a slight improvement from negative 2.1 billion to negative 18.8 billion Canadian dollars. So the main event of the day will be the preliminary GDP data quarter over quarter. This will also be happening at 3:30 p.m., where we expect that the US economy may have grown by 3.1% in the second quarter of the year. And this is up from the prior reading where we had 3.0%. So unemployment claims are expected to slightly reduce to 231K, down from 235K. Preliminary GDP price index quarter over quarter, we're expecting it to have remained the same at 2%. Pending home sales slight improvement to negative 0.4%, which would be an improvement from the previous reading of 0.8%. Of course, we'll also be getting data on natural gas storage, which is expected to more have doubled in terms of a marginal increase between the prior week and the week before that. So heading into Friday, early morning, we'll be getting a speech from FOMC member Waller. Here, it's very concerning, especially on Fed member speeches, mainly because Trump has been very critical of the voting Fed members, especially considering that they have not been cutting rates the way he wants. He wants the Fed to cut rates all the way down to 1%. So we also be getting Tokyo core CPI. Tokyo is usually a leading indicator of the Japanese economy in terms of measuring inflation. In this case, we're expecting a slight slowdown from 2.9% down to 2.5%. So we'll also be getting a set of more data points from the Japanese economy from 2:30 to 2:50 a.m., ranging from the unemployment rate, the industrial production data, retail sales, and consumer confidence survey, and lastly, the housing starts at 8 a.m. So clearly, there will be a host of data coming in from 2:30 a.m. all the way to 8 a.m. from Japan. And this is bound to increase volatility in JPY pairs as well as the Nikkei 225 index. So of course, by the time we get to 10, 11 a.m., then we will have the next market snapshot, which will be presented by Prudence Maximilian. So of course, he will have prepared more information and analysis on the Canadian GDP data, as well as the Fed's favorite measure of inflation, the core PC price index data. So focusing on the main event of the day, which is the preliminary GDP quarter over quarter, we're expecting a 3.1% growth in the second quarter for the US economy. And normally, we tend to see a very strong positive correlation between GDP data and the currency. So in this case, it basically means that if we see a better than expected increase in GDP, then this would likely strengthen the dollar. And then the opposite is also true. So if we happen to see a weaker than expected GDP report, then this will likely weaken the dollar. So on the US equity indices side, looking at the SP500, the Dow Jones, the Nasdaq, as well as the Russell 2000, we also expect a positive correlation with GDP, where an increase in GDP would mean that the economy is doing well, the companies are doing well. So we'll be expecting an uptick in US equity indices if the GDP is higher than expected. And if the GDP misses and we get lower than expected, then most likely we will be seeing weakening indices. So that's the analysis for the major event of the day. And of course, we could be getting mixed results, though we don't usually get a wide variance in the unemployment claims. So on the unemployment claims side, we all know that this represents the number of people who are claiming for unemployment insurance in the past week. So this is a weekly data point. So if this number reduces as expected, it shows a healthy job market. And as a result, it tends to be positive for the dollar as well as the equities market. So on the other hand, if unemployment claims are rising strongly, this tends to be a big problem, and especially for the US equities. Sorry, for the dollar is the exact opposite. So better than expected job market would likely lead to the Fed holding rates higher for longer. On the other hand, if the job market is worsening, then the Fed may rush to cut rates. So in this case, an increase in unemployment claims will be undesirable. And of course, if it's undesirable for the Fed and the Fed goes ahead and cuts rates, then that would be negative for the dollar, sorry. So cutting rates, anytime you hear lower rates, think of a weaker currency, and higher rates, stronger currency. So in this case, we are looking at the Fed and how it may react to this information. So we know that the Fed will be meeting in the oncoming days. Trying to check from the CME Fed Watch tool. So we have 20 days before the next Fed meeting. So from the CME Fed Watch tool, you can already see that the market is pricing in an 87.3% probability that the Fed will be cutting rates on the next meeting, as Powell highlighted in the last meeting, in the last speech at the Jackson Hole Symposium last week. So in this case, it's almost fully priced in that the Fed will be cutting rates by 25 basis points on the next meeting. So what are the other key highlights that we will be expecting to see in the markets today? So I'll be starting first with looking at the currencies and how they have been performing. So from the FinViz website, you will notice that the year-to-date performance, that is since the year started, the strongest currency has been the Swiss franc, which is up 13.26%. So the Swiss franc is largely classified as a safe haven currency. So when investors are unwilling to go into other currencies, then they tend to go for the Swiss franc, among other safe haven assets such as gold, which has been on a very strong rally this year. So the euro has also been the second best performing currency among the majors, being up 12.33% against the USD, the UK pound 7.82%, the Japanese yen 6.81, Australian dollar 5.17, New Zealand dollar 4.71%, Canadian dollar 4.35%, and of course we know that the Kenya shilling has not changed. It has been trading at 1.9.5 since the year started, or since August last year. So clearly, here we are looking at a market where the US dollar has been the weakest among the major pairs. So on the day, that is for today. Now focusing on the movements as of the since the market opened. The pound has been the weakest currency, though it's a slight drop of 0.08%, whereas the Australian dollar has been the strongest with a slight increase of 0.07%. So clearly, currencies have been very quiet since the day started. And of course, for the week, that is since the week started, we notice that the euro has been the major loser, down 0.74% against the dollar, whereas the Australian dollar has been the major gainer, up 0.31%. So out of that, now looking at the key highlights on other markets. One, we have an update on oil prices. So oil prices sleep on oversupply concern. So oil prices slipped in early Asian trading on Thursday, giving back some of the previous session's gains as traders prepared for the end of summer driving season and closely watched the trade tensions between US and India. So at the time of writing, the West Texas Intermediate was down 39 cents or 0.61% at 63.76 per barrel, while Brent crude oil was down 41 cents or 0.6% to $67.64 per barrel. So the modest pullback followed a more than 1% rise on Wednesday, with both benchmarks on course for their biggest monthly loss since April. So we know that OPEC has been expanding production. They already approved more expansion for the month of September. And now we are only 3 days before we get to September. And of course, once OPEC or the Organization of Petroleum Exporting Countries, once they approve and kickstart the expansion of oil output in September, then this is expected to drive oil prices lower. So from the Trading Economics website, some of the key highlights include: one, US futures fall as Nvidia drags. So Nvidia reported its earnings last night. It's the biggest company in the world. So after reporting better than expected earnings, you notice that the stock dropped by about 5% in after hours trading, but then made some recovery. It's still significantly down from the after hours trading. So earlier in the day, it was down 3%. Now it's down 1.72%, meaning that the markets are responding positively to the earnings report. So now looking at the quarter-over-quarter growth in earnings, you'd notice that the blue bars here represent the revenue and the yellow ones or orange ones represent net income. So clearly, from a quarterly comparison, you can see that the revenue has been on a steady growth. In the last 5 quarters, they moved from 26 billion to 44.06 billion, so almost doubling their revenue. And then if you look at their earnings, they have not been growing at the same rate, from 14.88 billion to 18.78 billion, though still some significant growth. So also it's important to note that the net income for Nvidia for the quarter ending April 2025 was much lower than the prior quarter, where it made 22.09 billion, and in this case dropped to 18.78 billion. So these may have spooked the markets, and that may explain what we are seeing in the stock responding negatively to better than expected earnings. So it's also important to note that Nvidia sinks after data center sales miss forecasts. CEO calls Blackwell demand extraordinary. So Blackwell is the latest microchip infrastructure designed for AI. So Nvidia reported second quarter earnings after the bell on Wednesday that beat on the top and bottom lines, though its data center revenue came in just shy of analyst expectations, weighing on the stock in after-hours trading. So the company reported quarter two data center revenue topped out at 41.1 billion. Analysts were expecting 41.3 billion, so a very slight miss, according to data from Bloomberg. So segment revenue was 26.2 billion in the prior year period. So clearly, if you compare with the prior year, it's almost double from 26 billion to 41 billion in a period of 1 year. I would say that is massive growth. So the numbers didn't include sales of its lower powered H20 chips into China. So Nvidia also noted that approximately 50% of its data center revenue came from large cloud service providers. The company's stock price fell more than 3% on the news in after-hours trading. So clearly, you can see it's one company that has really changed since the second quarter of last year. From a company that was making barely 2 billion in quarter one 2022, then it started growing rapidly from quarter two last year. And from a revenue of 10 billion, you can see it has grown to 41.1 billion. So clearly, very strong growth for the company. So this is not something you see with every other company, and that may explain why we have such a big valuation for Nvidia. In this case, you can see that the company is valued at $4.43 trillion, first ever company to hit $4 trillion in valuation. So far, the biggest company in the world with a price to earnings ratio of 58.50. So clearly, one company that has been making some good returns. So far, year to date, 35.23%. Right now, I believe it's about 8% in waiting for the in the Nasdaq, meaning that its stock movement has a much bigger impact on the Nasdaq compared to any other stock. So the 1 year performance, it's up 44.57%. That is compared to the same date last year. And in the last 5 years, it's up 1,280%, meaning that investors who invested in the company in 2020 are up 12x. So if you invested $1, you have $12 in Nvidia. So clearly, it's one company that just won't stop moving to the upside. So other than that, looking at other key highlights in the markets this morning. So South Korea holds key rate steady at 2.5%. EU passenger car registrations rebound, up by 7.4% year on year. China stocks rise on AI chip boost. Oil falls on soft US demand outlook. Australia private capex capital expenditure rises less than expected in quarter two, and dollar pressured by Fed rate cut bets. In this case, we have been seeing the dollar weakening despite a surprise uptick later last week. That is towards the end of last week. So I'm trying to see what else I may have missed. So today I felt it was good. I introduced you guys to a tool available on a website called myfxbook.com. So the website is popularly known for publishing trading ideas. So if let's say you have been trading on your account, instead of doing a physical journal, you can connect your account with myfxbook. You're able to analyze your performance. You can share that performance with other people. But on this case, I'm introducing you to a tool where they have sentiment survey. So since there is so many traders who connect their accounts to myfxbook, they're able to provide this data, showing you the positions of traders in various asset classes. So first here we have Euro USD, and as you can see, there's 4 colors. There's red, there's green, there's orange, and then there's a gray section here. So this represents different things. And in this case, I'll try to explain it in a very simple way. So from the number of traders who are sampled in these threads, you'll notice that 61% are trading real accounts or live accounts. 66% of the traders are profitable. 33% are not profitable. Funds won $1.9 billion. Funds lost $1.6 billion, and so on. So average deposit $69,000, average account profit $72,000, and loss $61,000. So clearly you can see there is some level of sophistication on the traders that are used to collect these statistics. So the first highlight here for Euro USD, you'll notice something. We have the symbol as I highlight, the action, whether the traders are short or long, the percentage of traders who are short or long. In this case, 60% of retail traders on my FX book are basically short on Euro USD, while 40% are long. So the number of lots committed to those trades is about 7,846 for the guys who are short, and 5,204 lots for the guys who are long. So clearly, if you look at the number of positions for the short guys, it's 29,000 positions, and for the buy side guys, it's 18,000 positions. So it's a very good sentiment indicator. Previously, we used the IG client sentiment survey for the same. So normally, the key thing I check on the MyFX book sentiment website is to see whether there is a name balance in the direction the traders have taken. So sometimes it's not 60%, 40%. Sometimes it can be up to 70 or 80%. So whenever you see that, that tells you a lot. And since retail traders are often wrong, then we try to identify opportunities in the opposite direction. So if I find like, let's say 90% of traders are bullish on Euro USD, then I will likely be bearish. And if they are, let's say 80% bearish, then I will likely be looking for a bullish trade. So you'll notice that this data is available for free. So I'm not recommending the website. So key thing to notice is that for certain pairs, for instance, if you look at Euro CZK, you'll notice that there is only one position. So this doesn't give you balanced insight. So you want to use the data for an asset where there is a lot of positions in the market. So let's try and look at gold. So gold, it's pretty much balanced. 49% of traders are short and 51% are long. So in this case, the indicator is not very useful. So there are certain assets where you will find that there is a very strong participation, and in that case, you're able to identify those opportunities. So feel free to check it out on your own time. So other than that, let's move on to the next part. Trying to see the key highlights from barchart.com. Especially on Forex. So in this case, we click on currencies here. Then we look at the Forex market overview. So far, from this site, you're able to see how major currencies are performing since the open of the day. So the dollar index is slightly down 0.04%. Euro USD down, USD CAD slightly down, USDN down, USD Swiss franc down, pound USD down, and so on, but no major moves as of this morning. So gold is clearly the biggest mover, down 2.02%. So in this case, I will be doing further analysis on gold. So major cryptocurrency prices, for instance, you can see Bitcoin is clearly positive, up $824.68 since the day started. So on the news side, key highlights: dollar erases are gains as treasury note yields fall. USD optimistic words, implications for gold, dollar boosted by higher treasury note yields. As Trump spars with the Federal Reserve, here is one commodity trade to make now. Fed turmoil weighs on the dollar and boosts gold. Dollar falls on threats of Fed independence. So clearly, one of the key highlights is the tug of war between the U.S. Federal Reserve Bank members and the U.S. President Donald Trump, and this is creating some crazy volatility in the markets. Of course, volatility is good. We use it to identify trading opportunities. So from the Yahoo Finance side, we don't have a lot. Nvidia CEO Huang, American tech stack should be the world standard. That was the key highlight from the earnings call last night. So Nvidia data center sales miss eclipses earnings beat. Of course, the earnings were better than expected. So trying to see if there is any other highlight. The Bank of Japan board member reaffirms stance on raising interest rates. So as we have known since the year started, we are expecting the Bank of Japan to continue hiking interest rates. And that has been a key boost for the Japanese yen, which has gained by about 6% against the USD since the year started. So oil drops even as US raises pressure on India over Russian crude. Of course, there is also escalating tensions between Russia and Ukraine, with both countries targeting each other's oil infrastructure. So also a key highlight in the markets today is that Asian and European bond yields are on the high. So whenever you hear of bond yields rising, it means that the prices of the bonds themselves are dropping. So think about it this way: if a lot of investors were dumping the bonds issued by the Central Bank of Kenya, then the Central Bank of Kenya would have to issue new bonds promising a much higher yield in order to attract more investors. So in this case, whenever you see bond yields rising, then it means that people are dumping those bonds. So as a result, whenever you see this happening, then you see the inverse relationship with the currency. So when bond yields are rising, the currency tends to weaken. So in this case, the Japanese 10-year bond yield hitting a 17-year high would likely mean that the Japanese yen is weakening. And of course, we have also seen it happen in the EU, especially France and Germany. Sensex, the India stock market benchmark index, crashed by 849 points yesterday, especially mainly because of the this was 2 days ago, mainly because of the conflict between India and the US surrounding India purchasing oil from Russia. So trying to see if there's anything else I've missed. So France 30-year yield poses near 2011 highs amid political risk. So as I said, yields are on the rise for Asia and Japanese economies. And whenever you see these, the currencies tend to weaken. So other than that, now I believe we can jump into some technical analysis territory and try to understand the prevailing market patterns. So kindly give me a sec. All right. So this is called the MetaTrader 5 trading application. It's the app that we use for trading. So if you are trading on a desktop, use the MetaTrader 5 trading application. And if you are trading on a mobile smartphone, we use the Equity Trader, equity with an I at the end, Equity Trader by FXPesa. You'll find it on the FXPesa website as well as Google and Apple Play stores. So we'll be doing quite an analysis on major currency pairs, indices, as well as commodities. So let's start with the dollar index. The dollar index had a big sell-off last week on Friday, and then Monday we had some recovery. Tuesday even further recovery before pulling down. Then Wednesday an even further recovery. Then towards the end of the day yesterday, there was a bit of a sell-off, but today we are seeing resumed optimism in the dollar making some recovery. So main reason this happened on the sell-off was after the Fed Chair Jerome Powell reiterated that there is a good chance that they will be cutting rates in September. So lower interest rates, as I mentioned, think of a weaker currency. So when the market heard that the Fed is finally looking to cut interest rates, then they knew that dollar would be weakening, and this was the market reaction. So clearly, for the better part of the week, the market is recovering from the market reaction last Friday. So with this in mind, and looking at today's pace of recovery, we are just right back to where the market opened, so not a very strong bullish momentum. And now looking at the major currency pairs, you notice that as the dollar recovers, some of these currencies are changing direction. For instance, the Euro USD opened here, went to a high of this level here, and then since then it has been moving further back downwards, which implies that if the dollar continues on this recovery path, then we could be seeing a retest on this area, in this case the euro weakening to 1.16032. So you look at pound USD, it's the same thing. We've had a very strong rally. Then early this morning, a continuation of the bullish momentum, which found some resistance around this area here. And since then, we've been moving further back downwards, which implies that either we're in a range or the pound continues weakening to the dollar. So the current level where it seems like the market is bouncing from seems to be a significant area that could serve as support. For instance, if you look at these areas here, previously serving as support, turned into resistance and then support again, we could be seeing the pound basically bouncing from this area and also moving back to the day's high. So it could also be the same for the Euro USD, though we don't see out of a key level support here. So that's why I said it's likely that the Euro is headed further back to prior support levels. So for the dollar trading against the Swiss franc, we had a key level support trend in here. Yes, it was broken on Friday, but the market got right back on pattern. But then now it seems like the market is breaking towards the lower side, which implies that we could be seeing some further momentum downwards. So I don't know how I got this trend line here, but okay, I know how I got it. This was the lowest price as of the beginning of the week, the low of the week, and now here it seems like the market is looking to extend and retest the low that we saw on Monday. So on the dollar yen pair, clearly this is a market that we can arguably say has been on a sideways momentum. So whenever you see some kind of sideways momentum, then you know that there will be predictable swings. So last week on Friday, a very big swing down, but then the better part of the week has been a swing up, and now yesterday's evening's price seems to be some kind of a drop. So if you look at these lows from 2 days ago, they seem to be correlating pretty well. So it's a market that is seemingly finding some level of support in this area. So far it has happened 4 times. Here we can see some form of liquidity sweep here. And now that the market is bouncing, we don't have to be very aggressive with price, but then more likely we see the dollar regaining some more momentum against the yen and perhaps retesting the high of day around 147.515. So on other currencies, we'll be looking at New Zealand USD. So for New Zealand USD, we had a pretty strong bounce here. This should be Monday, Tuesday, Wednesday, Thursday. This was Friday. Monday, Tuesday, Wednesday, we have been moving down, but then you can see that the market is defying odds. So there's still some kind of gap here to cross. In this case, after the market made this major move all the way down, you'll notice that we have been struggling to make a recovery and resume back to the mean. So that explains why the market has been really struggling to break above this area here. But there is a good chance we could be seeing that playing out either today or tomorrow as the market looks to push even higher. So in this case, you'll notice that here is a market that was really attempting to move down, didn't get to the prior low. So in this case, we are basically looking at a market that could not revert this move completely. And now it's potentially moving towards the upper side. So one of the most interesting pairs that I've seen as of this morning is the Australian dollar trading against the New Zealand dollar, where a majority of retail traders are shorting this market. And this is to the tune of 80%. So about 80% of traders have been shorting this market since morning, but then the market seems to be pushing even higher. So even if we have seen these gaps at market open, you'll notice from Audi New Zealand, there was a gap here, but the market closed the gap and kept going up. Then the following day, a gap at market open, closed the gap and we move higher. And it's the same story as of this morning when the market opened. A gap down, we close the gap and move higher. And now even if we are seeing some pullback, then this should be likely pointer towards potential entry points for even more bullish positions. And from the daily time frame, you can see it's a market that has been pushing higher and higher. And so far, we haven't reached any of the previous highs. So the next target should be around 1.14476 price action level, with the expectation that the bullish momentum will continue. So now, looking at the commodities side, I'll be covering gold and oil. So gold so far has been on an upswing. So this is something we have been discussing since the week started. Of course, after the Friday's big strong rally, Monday we had some form of consolidation here. Of course, we were looking for a breakout. Eventually, we had a breakout to the upper side, some form of liquidity grab before the market continued pushing higher. These continued extending higher on Tuesday. Then yesterday we had some pullback, and then we continued pushing higher. And today, after the pullback in the Asian session, notice how we have seen the market revert. So if this was Sydney trading session, during the Tokyo session we saw some recovery, and now as we enter London, we are breaking the high of day and potentially pushing even higher. So clearly, it should be a bullish day for gold, with the short-term targets looking to hit at least 3,400 price action level. So in this case, I expect the bullish momentum to continue for gold towards 3,409. So for Brent oil, we had a very strong consolidation here, where the market was just moving sideways. So then the market broke towards the upper side. This was last week and kept going up. So eventually we got to very close to our target, which was our previous high. So once the market got to that area, we saw a very sharp drop happening on Tuesday as well as Wednesday. Then notice the peculiar support area where the market bounced from was a reasonable support area. And after bouncing from here, we got back to this area here. Market rejected higher prices and we moved further back downwards. So in this case, notice after we got to this area and moved down, this morning we have moved even higher, but then upon getting closer to this area, price is now moving further back downwards. So this is synonymous to a market that breaks a key level support, bounces, and then continues in the same direction. So even if we have seen a further retest of the same area, good chances are that oil prices continue weakening, with a target area around $66.394 per barrel. So US equity indices have made quite a wild swing, with a very sharp drop in the last week, going towards a key level support here, then bouncing strongly towards the end of the week, and with this week we are seeing some form of continuation. So after the big sharp rally on Friday, Monday we spent dropping, rising, dropping. Tuesday some further drop and then recovery. Wednesday some further drop, recovery, and then some further drop towards midnight. And then today we have seen only bullish momentum, and clearly for the Nasdaq, we are looking at a market that is really attempting to break free towards the upper side. So notice the resistance has been tested several times and now it's testing again. So good chance that we see a breakout here. And if that breakout plays out, then we could be seeing the market extending its rally to 23,715, while other equity indices head into new highs. So for the Dow Jones, we are very close to the prior high that we saw on Friday, which was a new all-time high. If you look at the daily time frame, it's a new all-time high. So from the H1 chart, you'll notice that a lot of traders were betting that the market would retest this area here. And so far, it seems to be playing out pretty nicely. So all we have been seeing from Tuesday, Wednesday, and now today is more and more bullish momentum. So any pullback will be taken as potential entry point for further bullish momentum. So as for the SP500, if you look at the daily time frame, we are looking at a new all-time high. So from the 4-hour chart, more bullish momentum. From the 1-hour chart, yes, we had a retest here close to midnight yesterday, and then a sharp drop. But then today we have already seen bullish momentum, and we have hit yet a new high. So this is a high that has never been reached before. Of course, we expect the bullish momentum to continue. Above this price action level, there is no candlesticks on the left because the market has never been there before. So on other equity indices, the UK FTSE 100 index was on a very strong rally. From the daily time frame, you can see it was a very, very strong momentum. This was the April to Liberation Day tariff day, where there was a big crash and the market recovered quickly. Then for proceeding 3 months, very strong rally, and this being the 4th month, an even further extension higher for the UK 100 index. And then after getting to this high, you can see that the market has been pushing further back downwards with a very clear sequence of highs and lows, where from this high to the next high and the next high, the market seems to be forming lower highs. If you look at the lows over the last 5 days, they are also getting lower, which implies the likelihood of the UK 100 breaking even lower than this and getting all the way back to the beginning of this move here. So here we are looking at a price action target of around 9,183. So for the Nikkei 225 index, we had some form of consolidation here, but then now it seems to be picking up. Clearly, today has been a pretty bullish day. Of course, we expect the trend to be our friend and the bullish momentum to continue. So perhaps now a retest of the prior high, in this case, with the expectation that the market moves to last week's high. So here we have seen a very strong entry by buyers, especially the last 6 candlesticks on the 4-hour chart are all green, indicating that buyers may have come back into this market and are looking to push it higher. So for the China A50 cash index on the daily time frame, you'll notice that we have reached a level that we last saw in October last year. And with this strong bullish momentum that has been playing out, I would say since the month started, we should be looking to see more continuation. So yes, we had a sell-off yesterday, but then today you can see the bullish momentum here. So we started with a very strong rally, but there was a small gap here. Market rushed back, closed the gap, grabbed some liquidity around this area here. So anyone who was buying and their stop loss was just around this area, you can already see that that stop loss was wiped by this candlestick. And immediately that happened, there was a very strong rally, and still, if you look at the beginning of this move all the way up, we could be seeing the market looking to extend the rally and potentially getting towards the previous high. So on European equity indices, I would say there is quite a mix-up. We had a very strong bullish momentum for the German DAX 40 index. This played out as of this morning, very strong bullish momentum. Then we are seeing some form of pullback, which is a likely retest of this area here before we experience what is expected to be a bounce from the lower trend line. And we continue moving towards the upper side. given that from the 1 hour chart, this has been a pretty good channel to trade from either of the ends. And in this case, with a bearish channel, the lower side is taken as where you look for buys, and the upper side where you look for short selling. So as for the EU50 cash index, we had a target here. So whenever you have a channel like this and the market breaks out of the channel, you go to the base of the channel as a target. So in this case, after the breakout, you target this area here. So since we got to this area, notice how the market kept attempting to push lower and lower, but then has longer and longer tails on the lower side, indicating rejection of lower prices. So from a smaller time frame, in this case the 15 minutes chart, then you notice that basically the last 2 days were what we would describe as a ranging market. So the last 2 days were like this. So today is when we saw a glimpse of hope for bullishness. Earlier in the morning, the market made a strong rally and now is pushing back, which likely shows a potential retest continuation kind of setup, where the market retests the area and continues moving higher. So this is a likely idea for EU50 traders. So for the France 40, yes, we have been seeing a pretty big sell-off. The market has bounced really strongly, and now it seems to be cooling off, having closed the gap that was existing in the market. But of course, the direction still seems to be bearish. So notice how we had a gap here. This gap was formed 2 days ago. Our market kept going down, and today we went for the gap. And immediately after closing the gap, notice how the market is now pushing further back downwards. In this case, we should be looking for targets around 77.27. So as for the France stock market index, still on bullish momentum, and on a smaller time frame, clearly still strongly bullish, and this is especially compared with the last 2 days. So expect the bullish momentum to continue. Of course, in this case, you'll notice that this market was trading along these parameters. If this was our support and our resistance was following this path, then we are trading above the prior resistance, and this implies a breakout retest continuation higher. Of course, we should be looking at even higher targets, of course, around this area here, 1.12263. So for Norway stock market index, we finally closed the gap that we have been waiting for a long time. So after closing this gap here, the market went for a new high. The high was now above the prior high. And after getting to that high, now you can see short selling positions coming in, which likely implies that we are more potentially going towards the prior range resistance, now turned into a support, and the market is moving down towards that area. So for the Netherlands stock market index, of course, we knew that we were trading in this kind of channel. We were on an upswing last week, but now we got resistance. Almost perfect evening star with a shooting star in between. And after that, you can see that the market now kept going downwards, which likely implies that we are on this downswing towards the lower trend line. So short selling positions would most likely surface. So that's it for the day. I'll be checking the questions on the comment section, respond to the questions as we approach the end of the presentation. So hello, Odiwa Opar, and shout out to you for being the first person to join and comment. J Squad in the house, Robert Cavales, Me the Facts, good morning, Dennis Mwangi, good morning, and Maureen Kakungi. Good question from Aponderito. Nvidia Bloomberg reports had disappointing sales numbers and has removed China from future forecast. Isn't this a sign the AI dance is nearing its end? Isn't it time we see from fraud in AI stocks away? Well, number one thing is that global liquidity has been on the rise, and with gold stagnating and moving sideways for several months, investors have developed some form of appetite for risk. So with investors developing some appetite for risk, of course, they tend to go for risky assets. And with Trump approving the big, beautiful bill, we expect to see even more spending from the US government. So in this case, I'm still bullish on Nvidia, but bearish on Palantir, which is trading at crazy numbers in terms of price earnings multiple, price to earnings multiple. But then the numbers in Nvidia, even though slightly lower, they were still significantly good. And by good, I mean it's a company that has been beating earnings quarter over quarter for the last couple of years. So the only key difference we see here is that people got greedy. They expected the company to perform even more. But then it wasn't that big of a miss. So still bullish on the stock. And of course, we have seen that the stock dropped by 5% in after hours trading immediately after the announcement. But then it has already recovered. It's only about 1.7% below yesterday's closing price. So clearly quite bullish, and we could be seeing it turning green for the day right after market open. So let's observe the volatility. Of course, at 4:30 p.m., once the market opens, we will be seeing increased volatility in Nvidia shares trading as well as the performance of the Nasdaq. So if you are just beginning your trading journey, make sure to observe the Nasdaq trading at market open as well as Nvidia. Of course, you'll be expecting increased market volatility. So also very good comment here from Apo Derito, and I really appreciate this. So he's basically saying that thank you for the Bullish Banter podcast episode. I believe it's our latest episode. It was really well researched. However, you mentioned that Goldman Sachs report indicated participation of retail investors and corporates are staying away. Explain. So we know what happened in 2021 with GameStop. The participation of retail investors in GameStop increased volatility, especially in some funny stocks that were basically stocks of companies that were weakening. And a lot of hedge funds had shorted these stocks. So the traders basically bought the stocks and drove some companies into losses, with key highlight being Achegos Capital, which was a hedge fund in the US that was basically liquidated. So in this case, whenever you see some form of retail fancy trading getting into the markets, it's usually a red sign, because big investment firms will try to avoid that or align with the direction of the retail traders, because they don't want to get their fingers burnt. So while retail traders may, let's say, gamble $1,000 on a stock, and if they lose, they don't mind. For them, they are subject to very many rules and regulations, especially on risk management. So in this case, there's a good chance that we could be seeing an extended bull run, but then they don't come in a straight line. So sometimes you'll get this volatility where the stocks drop, let's say, by 5-6%, presenting you with an opportunity to buy at an even cheaper price. So for instance, the banks that had access to Nvidia shares after the 5% drop after earnings, if they bought, I'm sure they are up to the percent since then. So for those who are new, you should make sure to check out the Bullish Banter podcast. It's one of the best podcasts for traders out there. So I am the co-host with Jesse Ogora being my other co-host. We delve into different topics in the markets concerning things that might help you as a trader in understanding, let's say, the Fed decisions, in understanding trading strategies, understanding the market trends, global liquidity, volatility, and many other topics. So make sure to check out the latest episode. It's available on FX Pesa YouTube channel. Give some highlights on the Nikkei 225 index chart. I believe I already did. Let's see. Where is the Nikkei 225? So it went to a multi-year highs. Sorry, that's not the right one. Where is Nikkei? Yes, it's right here. It's written JP225. That's the code name on the MetaTrader 5 trading application. So you can see it's on a very strong bullish channel. We had a downswing here that looked more of a consolidation. So if you pay focus on the most recent swings here. So this is the consolidation. It's more like a triangle where the market was moving down, so more of a falling wedge, and of course we have a breakout towards the upper side. So whenever you have a breakout, we know that the target is all the way up, but if the gap is not big, then there can be in between targets. In this case, for instance, today we could be seeing the market topping at the last high that we saw on Monday here. So the high of the week is what the market is attempting to reclaim. So even though we are seeing some short-term pullback playing out here, so perhaps in the New York session, we'll be seeing the market extending, getting to the Monday high around 43,183. And of course, the longer-term trend is bullish, so you might not be on the wrong side of the market, especially looking at this area as a previous high and now being a support area where the market was looking to retest, bounced successfully, and now we are looking to retest this area here. So on the 1 hour time frame, there's still more room for upside. And of course, on the H4, you expect further momentum upwards. Whenever you have a falling wedge such as this and the market breaks out, the target is often the top of the wedge here. In this case, 43,919 price action level. So as we approach the end, let's see if I can answer the questions a bit faster. How are WTI and Brent related to Platts? Do we have a market index for distillates? Well, in trading, we tend to focus on WTI and Brent since they are benchmarks for crude oil. So Platts is more refined and includes more, I would say, more complex and customized contracts. So when investors are trying to speculate on oil, they tend to go for the benchmarks. So in this case, yes, they are related because Platts includes the price of Brent as well as in mostly Brent in most markets. And you'll notice that some of these prices can be adjusted and negotiated. For instance, if you're getting, let's say, a bilateral deal from Saudi Arabia, UAE, you're able to negotiate your prices. So this basically changes things a lot. So for benchmarks, it's a fair market, open market, no negotiations, clearly subject to the forces of demand and supply. So I can see Tony Dark in the house. Thank you for joining the session. Shout out to you. He's been one consistent attendee of these sessions since we started 3 years ago. Always appreciate seeing you in the house. So lastly, from your bullish banter, if it's retail investors moving the markets, means there are big boys are selling. Of course, they are on the opposite side of the trade, meaning these all-time highs may experience some big pullbacks or correction. Yes, we could be seeing the markets going for a correction, especially knowing that markets are cyclical. And cyclical, it doesn't mean because a market is going up, it will go down. It's more like the traders who are buying when prices go up, at some point they want to take some profits. So from these all-time highs, we could be seeing some profit taking playing out. And when it happens, still the markets are extremely greedy. And that means that if we happen to see 5-6% pullbacks, then the investors will be coming in heavy and try to claim some of these pullbacks. So I'll give you an example. Notice how the Nasdaq just a few days ago moved from this high and to all these low down 4.25%. And so we have rebounded by more than 50%. So in this case, it's a panic selling and then the market recovers quick. So from the 4-hour time frame, you can notice that we have had this several times. In this case, here you can see we were down 4.47%. And then here we were down 4.23%. And in each time, the market recovered in a week or two. So in this case, after the big sell-off last week, we can see the recovery path is almost taking 1 week. And of course, within the next 1 week, we could be seeing yet another new all-time high. So it's pretty simple. Big panic selling, you come in and then you trade the recovery. So thank you very much, everyone. Thank you guys for joining the session. So remember, if you have traders who appreciate this series and analysis that we do from Monday to Friday at 11 a.m., make sure to share these sessions with them. If you're watching this on X, like and retweet would be very much appreciated. If you're watching YouTube, like and subscribe to the channel so you get notified we have a live session. And with that, I believe we have had a successful session. Hope to see you guys on the next session. So last thing, just to give you a highlight, on the last episode of the Bullish Banter podcast, we talked about, is the stock market in a bubble or built to boom? So make sure to check it out. The episode is live, and we'll be sharing one more episode today. And we are opening the mic to all of you guys. So if you are experienced in the markets, you enjoy talking about the markets, analyzing markets, this is open for you. Make sure to join us on the Bullish Banter podcast. I've shared a link on my Twitter, on our social media channels on Bullish Banter, and you'll just fill a very short form and we'll invite you. We'll get to talk about the markets, analyze, and basically have a fruitful conversation. See you on the next episode, and of course, share some feedback on the most recent episode of the Bullish Banter podcast. And if you leave a review, it will also be very much appreciated. Thank you.